Hi there, welcome to Grain TV. I'm Kevin McNew. It's Tuesday, November 15th, and up markets in grains. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn closing above 340, gaining 4 3/4 cents. Beans moving up into the high 990 range, closing up 7.5, and wheat in Chicago gaining a respectable 5 cents a bushel. Let's start first in the crude oil market, where crude oil prices shot sharply higher today, gaining $2.50 a barrel thanks to more concerns that OPEC in their meeting at the end of this month will likely cut production. There was some talk as the Saudi Arabia oil minister went to Qatar to negotiate some of these deals that the output cut seems more likely with the big slide in prices in the last few weeks. So that got prices yesterday from $42 today up into the nearly $45 range. So overall, we got a big move higher in crude oil, which helps support commodity markets as well. Looking at the US dollar, we saw the US dollar continue to inch higher, hitting its highest mark in 13 months. So that is potentially negative in the long term for exports as we face a much higher US dollar and potentially weaker exports from the U.S. shores as we move forward. But this morning we got more export news from USDA, another couple of rounds of soybean sales, 121,000 to China and another 126,000 to unknown destinations. That marks a 700,000 metric ton total for 2 days in a row now. So that is helping support the soybean market, even though last week's report showed bigger than expected stocks, bigger than expected production that had the potential to weigh on prices. Let's change gears now and talk about NOPA Crush. The NOPA Oilseed Processors Association came out with their October crush forecast, and these were exceptionally strong, coming in well above expectations. Traders had been looking for about 160.5 million bushels to be crushed in October. Instead, we got a much higher number, 164.6, well above even the high end of expectations, which was 163.1. Conversely, bean oil stocks were a little bit higher than expected, coming in at 1.343 billion pounds versus 1.323. This news, while supportive, didn't show a big jump in the market. In actuality, where the big jump in the market occurred was at the end of the day. We just got a big move higher as crude oil continued to move higher throughout the day, and this seemed to cause a bit of flurry in the last 20 or so minutes of trading in the soybean market. When we look at where we opened the day, we had the export news this morning, we had the NOPA Crush figures a couple hours after the open, but at the close, pretty much all of the gains we saw today happened in the last 10 minutes of trade. So watch tomorrow's trade, watch the overnight trade to see where we go. Certainly we're getting up into that $10 mark, which may set off some stops if we can get there. When we look at sort of the long-term daily chart here from the GrainEdge trading platform, you can see where we're at today is pretty much the mid-range of where we've been all the way back to mid-July. We have just been bouncing between the 940 and the 1030 high, and so 990 is around where we're at now. We continue to sort of find it difficult to break out of this range one way or the other. So it's difficult to say where we'll go, but potentially have the ability to test that $10 mark with today's action. Let's switch gears and talk about the cash market, where it has seen some strength, especially in the last 3 weeks after setting a harvest low. If we look at corn, first of all, in red, you're going to have the ethanol facilities in Iowa, Illinois averaged together. In blue, you're going to have the river terminals. The dashed lines show you the 7-year or the historical norms for these different market players. And what you can see, obviously, is the river terminal has been tracking very consistently along its historical norm, while the ethanol facilities have been tracking well below it. We have seen a big surge here in the last 3 weeks of river terminals going up 17 cents a bushel in the last 3 weeks. That's been very supportive to farmers as they've been trying to sell into that market. Ethanol plants have been moving higher, in sort of a way to keep the flows to them, but they have not been moving substantially higher. I would expect them to have to start to increase as we get further past harvest and their supplies start to dwindle. In soybeans, a similar story. River terminals have been moving sharply higher, while crush facilities have been sort of along for the ride, but not really keeping lockstep. In soybeans, we've seen a 36-cent increase in river terminal basis. Not surprising given the blistering pace we have seen in exports, with over 2.5 million metric tons being the norm here in the last month or so every week. So overall, it is a market that continues to see strength in river terminal basis. Crushing facilities, processing facilities are along for the ride, but they're not really bidding it up, so to speak, at this juncture, as supplies are still plentiful and available from country elevators. If you are interested in learning how you can capture the best opportunity in your cash market at Grain Hedge, every day we're collecting over 4,400 grain markets, cash and forward prices from these grain elevators, and we're calculating for our clients what their best selling opportunity is, adjusted for trucking, adjusted for storage, and we send that answer to them every day by email. If you'd like to learn more about how this works, by all means visit us online at grainhedge.com. Take a free demo of our trading platform, get our technical alerts, and get our cash emails every day sent to you. That's all we've got for today. Tomorrow we'll be talking about EIA ethanol numbers.